What if the most profound transformation in investing isn't about finding the next hot stock or timing the market just right, but about something much bigger, leaving the traditional stock market behind altogether? Imagine a world where the old rules of Wall Street no longer apply, and a new financial frontier is emerging right before our eyes. For generations, the stock market was the ultimate destination for anyone hoping to build wealth. But now, a quiet migration is underway, one that's not making headlines every day, but is reshaping the very foundation of how we invest. This isn't about people packing their bags and moving to new countries. Instead, it's about capital, aspirations, and the collective dreams of a generation flowing away from the marble halls of Wall Street and into the digital realm of crypto. Every day, more people are choosing to move their money, their hopes, and their trust from the old financial system into something entirely new, something that feels more in tune with the digital age. Millennials in particular are turning away from the stocks and bonds that built their parents' and grandparents' retirements. They're questioning whether the old ways still work for them or if there's a better path forward. Instead, they're embracing digital assets like Bitcoin and Ethereum, currencies that exist only online, yet promise a new kind of financial freedom and opportunity. This isn't just a passing fad or a niche interest for tech enthusiasts. It's a seismic shift in how an entire generation thinks about money, trust, and the very nature of value itself. Their financial coming of age wasn't marked by stability or prosperity, but by crisis. By the 2008 financial collapse, by bailouts, and by a sense that the old systems weren't as reliable as they seemed. They watched as the so-called infallible institutions faltered, and the trust that once held the financial world together began to unravel. For many, this changed their relationship with money forever. So why would someone trade a piece of a company, a stock certificate, for a line of code on a blockchain? The answer goes deeper than just chasing returns. It's about a growing skepticism of traditional institutions, a comfort with living life online, and a desire to take control of their own financial destinies. Scandals, hacks, and broken promises have left many questioning who they can really trust. For this generation, control means more than just picking stocks. It means being able to move money instantly, invest globally, and participate in financial systems that are open 24/7, no middlemen required. They're investing in the idea that finance can be open, transparent, and accessible to anyone with an internet connection. Decentralized finance, or DeFi, is more than a buzzword. It's a vision for a new kind of financial system. This story is about more than just millennials and crypto. It's about redefining what an asset is, who gets to own it, and who has the power to shape the future of wealth. The future of wealth is being written right now, in real time, by those willing to question the status quo and imagine something better. The shift is happening now, quietly but powerfully, and its impact will echo for decades to come. The question isn't whether this generational shift will change the world of investing, it's how far it will go, and what kind of future it will create. Let's explore why. To understand millennial investors, start with 2008. They watched as banks collapsed, jobs vanished, and the financial system nearly imploded. The message: the system is fragile, and those in charge don't always have your back. Trust in banks was shattered. They became symbols of opacity and self-interest. Crypto's promise of a system without banks or governments became a logical solution. Blockchain's transparency stands in stark contrast to the secrecy of 2008. For digital natives, open ledgers and verifiable code are deeply appealing. Choosing crypto isn't just financial, it's philosophical. Millennials are opting out of a system that failed them, and into one that aligns with their values. The scars of 2008 drive their search for something better. Millennials are digital natives. They've never known a world without the internet. Managing money digitally feels natural, not risky. Crypto's abstract nature is no hurdle for a generation raised on virtual goods and online currencies. Buying crypto is as easy as ordering a pizza. No brokers, no paperwork. The market is open 24/7, fitting their on-demand lifestyle. Crypto's language and culture are woven into the internet itself. Concepts like DeFi and DEOs excite them as much as the assets themselves. Investing in crypto feels like joining the next wave of the internet, Web 3. Traditional finance feels slow and clunky by comparison. For millennials, crypto isn't foreign, it's home. Every generation has its gold rush. For millennials, it's crypto. The promise of digital currencies has captured the imagination of a generation raised on the internet, shaped by the 2008 financial crisis, and hungry for new ways to build wealth. Crypto isn't just an investment, it's a movement, a rebellion against traditional finance, and a shot at rewriting the rules. The stock market offers slow, steady growth. It's the classic path, built on decades of compounding returns and patience. For generations, this was the blueprint for building wealth: buy, hold, and let time do the heavy lifting. But crypto offers the chance for explosive returns, the kind that can turn a modest investment into a life-changing windfall almost overnight. It's a high-stakes game, but the rewards can be extraordinary. Asymmetric risk, limited downside, unlimited upside, makes crypto irresistible. The idea that you can only lose what you put in, but potentially gain so much more, is a powerful motivator for those willing to take the leap. Millennials face student debt and high living costs. Many feel locked out of the housing market and burdened by expenses their parents never faced at the same age. The old paths to prosperity seem blocked or out of reach. For them, slow wealth building feels out of reach. Saving a little each month and waiting decades for results doesn't feel like a real solution when the cost of living keeps rising and opportunities seem scarce. That's why they're willing to take bigger risks for a shot at financial freedom. The possibility of breaking free from financial constraints is worth the uncertainty and volatility. With time on their side, millennials can recover from losses and chase high-reward opportunities. Their long investment horizon means they can weather the storms, learn from mistakes, and try again. Stories of crypto millionaires fuel FOMO, fear of missing out. Social media amplifies every success story, making it feel like everyone else is getting rich except you. This sense of urgency drives more capital into the space, as people rush to join the next big wave before it's too late. The crypto market's small size means new money can move prices dramatically. A single tweet or news story can send prices soaring or crashing in minutes. Volatility is a feature, not a bug. It's where opportunity lives. For those who can stomach the swings, the potential for outsized gains is always present. Early adoption feels like a ticket to the next big thing. Being first isn't just about bragging rights, it's about capturing value before the rest of the world catches on. For many, it's a calculated bet on a different future, a belief that technology and finance are converging in ways that will reshape the world. They'd rather risk being wrong than miss out entirely. The fear of regret outweighs the fear of loss. The stakes are high, but so is the potential payoff. For millennials, crypto is more than a gamble. It's hope, ambition, and a chance to change their financial destiny. Traditional investing is solitary, crypto is communal. Online platforms like Reddit, Discord, and X are the new trading floors. Here, investors debate, share research, and build culture together. Investing in crypto is like joining a tribe. Each coin has its own loyal following. Holding a token signals your values and identity. The social layer adds emotion and conviction that stocks rarely inspire. Crowdsourced research and due diligence make investing feel democratic. Community creates resilience. Memes like HODL and Diamond Hands help weather downturns. The sense of shared purpose turns assets into movements. For many, the community is the most compelling part. They're not just buying assets, they're buying into a vision. Crypto is as much about belonging as it is about profit. In today's world where governments are printing money at unprecedented rates, the idea of Bitcoin as digital gold has never been more compelling. This narrative resonates especially strongly in times of economic uncertainty, when people are searching for assets that can hold their value as traditional currencies lose purchasing power. Millennials in particular are acutely aware of the risks of inflation. Many have seen their savings eroded by rising prices and are skeptical of the long-term stability of fiat currencies. With headlines about central banks injecting trillions into the economy, it's no wonder younger generations are looking for alternatives. Bitcoin's hard cap of 21 million coins is a stark contrast to the endless supply of dollars or euros. This built-in scarcity is what makes Bitcoin so attractive as an inflation hedge, offering a sense of certainty in a world where money can be created with a keystroke. The predictability of Bitcoin's supply, combined with its decentralized nature, gives holders confidence that their wealth won't be diluted by policy decisions or political whims. For many, this is a level of security that traditional money simply can't match. As a result, holding Bitcoin isn't just about chasing quick profits. For a growing number of people, especially millennials, it's about preserving value over the long term and protecting themselves from the unpredictable swings of the global economy. Meanwhile, NFTs, or non-fungible tokens, have completely redefined what it means to own something in the digital world. They've opened up new possibilities for artists, collectors, and fans alike. NFTs are more than just digital art. They're digital certificates of authenticity, proof that you own a unique piece of the internet. This technology is changing how we think about ownership and value online. For millennials, NFTs offer a way to support their favorite creators directly, bypassing traditional gatekeepers. They also unlock access to exclusive communities, events, and experiences that are only available to NFT holders. This new model blurs the lines between being a consumer, an investor, and a community member. It's a shift that empowers individuals and fosters deeper connections between creators and their audiences. At the heart of both Bitcoin and NFTs is blockchain technology, which enables verifiable scarcity and transparent ownership. This shared foundation is what gives both assets their unique power in the digital age. Ultimately, these innovations are transforming how we store value and express identity online, offering new tools for financial empowerment and creative expression in a rapidly changing world. Crypto's promise comes with real dangers. Extreme volatility means fortunes can be made or lost overnight. The same swings that create opportunity can wipe out savings in a flash. Scams and fraud are rampant. Rug pulls, phishing, and lost keys are common. No central authority means no safety net. Mistakes are often irreversible. Regulatory uncertainty adds another layer of risk. Rules can change overnight. Investors are betting on both technology and favorable regulation. The tech itself is complex. One wrong move can mean total loss. Being your own bank is empowering, but also risky. The crypto world is still the Wild West, exciting, but dangerous. Caution is essential. The millennial shift to crypto is reshaping finance. Traditional institutions can't ignore digital assets anymore. They must adapt or risk irrelevance. Major firms now offer crypto services, pushing the industry to innovate. Millennials want seamless, digital-first financial experiences. Expect a blend of traditional and decentralized finance, stocks, bonds, and crypto in one place. Blockchain tech could make old processes faster and more transparent. Crypto's rise challenges the old wisdom of stocks and bonds. Advisors must learn digital assets or lose clients to those who do. Regulation is coming, bringing both risks and legitimacy. The future will be a hybrid. Crypto's innovation meets traditional finance's stability. Millennials are driving this transformation. We stand at a crossroads. Old finance versus the new world of crypto. Millennials' move to crypto is a grand experiment, shaped by distrust, tech fluency, and a hunger for control. Outsized returns and inflation hedges draw them in, but the risks are real. This isn't reckless.